heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Tesla posts its first increase in quarterly sales this year, but it disappoints investors.
And Apple preparing to announce a new low-end iPhone. We have the Bloomberg exclusive.
Plus, we talk to tech heavy hitters later in the hour. CEO of Pinterest coming from its advertising event. Ed.
Let's get straight to our top story. Tesla just posted its first increase in quarterly sales this year. But for the quarter, deliveries came in just below street estimates. Shares are down sharply after the company delivered 462,890 EVs in the third quarter, just shy of the 463,897 estimate. And this all ahead, of course, of next week's robo-taxi event. Bloomberg's Global Autos editor, Craig Trudell, joins us from London. Going into the data, it's interesting because 3 and Y, the volume products, beat estimates. The other bucket, which is X, S, and Cybertruck, missed estimates. What else do we know?
Yeah, I think this is a case of, a narrow beat giveth and a narrow miss taketh away. This is a company that, its shares are known to be quite volatile. Just a quarter ago, they just barely exceeded expectations and the stock went kind of crazy. I don't think we necessarily learn a ton from these numbers. I think, we do generally see a nice upward trend both sequentially and year over year. Having said that, if you kind of, pan out a little bit and look at the trend, going a little further back, we really just see a sort of general kind of flattening and lack of growth from this company. On a year-to-date basis, we may actually see a decline if trends hold up. We've seen them drop a little over 2% for the year. So this is a company that is priced as a growth stock that is having trouble growing,
and particularly in China, Craig.
Yeah, and I think a lot of the expectations going into these numbers was that this company was going to get a big boost from China increasing subsidies for people to trade in older cars and get an electric vehicle. We did see Tesla's wholesale numbers tick up as a result of that boosted incentive. But those numbers also are wholesales. That means they're kind of closer to shipments as opposed to actual vehicle deliveries. And so, we may actually see some of that, support coming into play in the fourth quarter of this year.
As always, you go straight to social media. I posted the numbers there, and there's this big body of people that say the sell side doesn't know what it's talking about. This isn't about delivering EVs. It's about a future where Tesla owns and operates a proprietary ride-hailing app, Craig. They run and operate robo-taxis, and I think next week we will find out whether or not that's true.
Yeah, I think, the counter to that argument would, of course, just be that this is also a company that's talked about, putting self-driving cars on the road and offering a service that would be sort of Uber-like, where you could hail one of their self-driving cars for years now. I mean, it's been a half decade at least since Elon Musk was openly musing about this. So, whether or not they're actually able to deliver that is another question. I do think that, if they're able to execute and sort of do what others haven't, pulled off, which is really do this at scale, of course, that would be massive for this company. But it's already a pretty massive valuation for a manufacturer that is really struggling to increase sales.
All eyes on a little later this month. Craig Trudell, thank you. Now, let's get the investor perspective. LT Tiedemann Global Chief Investment Officer Nancy Curtin joins us with your view more broadly than just one single stock. But the AI play that is so key to Tesla is so key to the market, and we still question it.
Well, I think there's a couple of things to think about. We are strong believers that this is early innings and it's long-term, medium-term, hugely disinflationary, will bring great efficiency and productivity benefits. But near term, let's just look at some of the facts here. The hyperscalers are having to spend billions of dollars, probably will go into the trillions. We're doing, a one-time shift from CPUs to GPUs. We're extending data center capacity, but we also have to build power. Power not just for Gen AI, but we just touched on autonomous vehicles, and power demand looks like it's going to double over the next 3 to 5 years. These are huge, huge numbers, huge capex investment. So it may be near term that actually this investment in capex, which by the way we think is an interesting investment opportunity in infrastructure, but this investment in capex and maybe shortages that it can bring near term, the monetization doesn't come as quickly and could bring some inflation as well.
So where in the stack does one invest? Do you go still picks and shovels chips? Do you go infrastructure when it comes to energy? Do you go to applications of AI?
We think you go a little bit to all of them. So first of all, we are invested in infrastructure. We think it's super interesting, digital infrastructure and power and the combination. We think we can earn equity-like returns, essential services, less correlation to the market with some great counterparties here and with revenue escalation and inflation protection over time. That's a pretty powerful story. But we also have investments at the other end of the spectrum with venture companies that are doing some things that are incredibly disruptive. We think there'll be winners and losers from Gen AI, and we want to make sure we have exposure to that as well. And then finally, we have a specialist technology manager, because that allows us in the public markets to look where Gen AI is not yet priced in. And I would say all valuations, particularly in data-heavy industries, Gen AI is not priced in today. And there's some really interesting opportunities there.
Nancy, the problem for our Bloomberg Technology audience, if they're just tuning in, is that Tesla's down 5% on a data set that comes out once a quarter, even though if there's like this big body of people that believe in this long-term story that's very analogous with what you've just outlined. I think I'm right in saying that LT has some small exposure to Tesla, but use that as a case study. What wins out here? This multi-year horizon belief in AI or the short-term pain of having to get there?
Well, we have a strong view that technology may underperform a little bit here. There are very high expectations. These stocks are trading at pretty high multiples, 32 times on average, for the Magnificent Seven. And meanwhile, the Fed and other central banks in the world are easing interest rates, which we think will help the other 493 shares, which trade at more attractive valuations, and with the easing should support earnings growth going forward. So there are things to do in the market. You don't just have to play technology at the moment to benefit from what's happening with the soft landing and the Fed easing. And as I said, we think it's going to be a little time here for monetization to take hold. Maybe it's 26, maybe it's 27. Bain believes, by 27, we'll see $1 trillion in revenue. Let's see. But it's going to take more time. And remember, in the enterprise, when you use Gen AI, it's not like the consumer. You have to embed it in business processes. You have to industrialize it. You've got to make sure that it doesn't have cyber threats and so on and so forth. So this all takes time. So, a note of caution here near term on Gen AI. We can do other things in the marketplace and benefit from the digital picks and shovel build while we're waiting. But we do ultimately think it will be transformational.
Nancy, is there a corner of the technology sector that's underappreciated by investors?
I think beyond the Magnificent Seven, as you look more broadly, to other companies that will participate, NVIDIA is not going to be alone here. Maybe it's a winner take most as opposed to a winner take all. So there will be competition. There are other companies that also benefit. Think about data centers. They need cooling. So there are industrial companies that are providing cooling services to data centers that trade at really attractive valuations. So there are other ways of playing Gen AI in this infrastructure boom. Take a look at utilities, probably one of the best performing sectors year to date. Who would have thunk it, right? So there are other ways to think about this. You just have to think more broadly. Where is Gen AI not priced in, particularly in this period where we're in the CapEx build? The monetization will take some time. And at the moment, I think investors may be getting ahead of what may be delivered next quarter.
What about where it's underpriced globally, Nancy? I think of the latest news that we'll go into a little bit later about KKR looking to take private a Hong Kong-based or traded chip company. What about global exposure?
Well, I think there's some really interesting things happening globally. You might have seen as well, something like Blackstone just did a $16 billion deal in Australia called AirTrunk, which is the largest Asia-Pacific data center. Europe is further behind the U.S. build. Asia-Pacific is further behind the U.S. build. So we think international exposure to data center infrastructure, power, and build out is a hugely interesting opportunity. They are much further behind the United States, and prices are more reasonable on a relative basis. So, yeah, there are opportunities here beyond the United States, and they are internationally.
Nancy Curtin, Chief Investment Officer at Alti Tiedemann Global, really sizable advisory and investment firm. Thank you very much. Now, coming up, Apple prepares for a new slate of iPhones and iPads as analysts raise concerns about iPhone sales growth. We have a Bloomberg exclusive coming up next. This is Bloomberg Technology.
Apple is preparing to announce a new low-end iPhone early next year alongside upgraded iPads. That's all according to sources. Bloomberg's Mark Gurman broke the news, brings us the details. Is this about India and China and the consumer there?
This is not about India and China specifically. This is more of a global thing, right? If you look at how the iPhone 16 has been performing across the world, right, it's not meeting expectations according to some analysts. But if the company comes out with a phone, obviously they've been planning this for multiple years, that brings down the price point of features like an edge-to-edge screen, Face ID, this thinner look with the squared-off edges, globally at a sub-$500 price point, they're going to be bringing something quite compelling to the market. Now, the reason this is not so much about India is because in India, the market share leaders, they're not sub-$500 phones, they're sub-$200 phones, right? So they're still not playing in that particular market that would boost market share significantly in India, but this would help them make additional strides globally.
Mark, project codename V59. What are sources telling you about a refreshed iPhone SE?
Yeah, so that's the iPhone SE. That's the new low-end iPhone. And this is going to look similar to the iPhone 14 from a few years ago. It's going to have the internal specifications to support Apple Intelligence. There's going to be upgraded cameras over the prior SE. The current SE launched in 22. That's when they added 5G to it. But it still has the home button, right? It's the only iPhone left with the home button. In fact, it's the only Apple product that hasn't been updated to remove the home button. They've already transitioned the low-end iPad, right? They cut the price of that and made that a full-screen design. So this was the laggard in the product line, and that's going to change now. And this is going to make things easier for Apple. They don't have to support older operating systems for that much longer that support a home button. They're able to move to a user interface that's consistent across all of its devices. So this is a big deal for the consumer and for Apple as a company. And I think this is going to be an extremely strong seller.
How big a deal, how strong a seller is the new iPad Air going to be in the keyboards?
Yeah, the iPad Air update's going to be quite minor, right? The iPad Air was last updated alongside the iPad Pro in May. What they did last May is they introduced a new larger size of the iPad Air. So what they were doing is they were bringing an iPad Pro size display down market. And that actually is pretty significant for schools and businesses where you're buying these things in bulk. And you may want to buy something with that bigger display, but not spend the typical extra $400 or $500. So that was quite interesting. And then they're also manufacturing new keyboards for those new iPad Airs. The current models actually use the old iPad Pro keyboard. They didn't create a new iPad Air keyboard just for that device when they launched the new models earlier this year. And so by doing that, they're able to bring down market some of the new features of the iPad Pro keyboard to that iPad Air family and create more of a unified accessory and product ecosystem. So I think that's going to be a strong seller potentially as well.
Bloomberg's Mark Gurman with another big breaking story on Apple. Thank you very much. Now, coming up here on the show, how one company is using AI to speed up coding. More on that next with Codeium CEO Varun Mohan. here on Bloomberg Technology.
Google, well, it's looking to take on OpenAI with new AI software that resembles the human ability to reason. Similar, of course, to OpenAI's O1. It's all according to sources who say multiple teams at Google have been making some progress in that area. Bloomberg's Rachel Metz has more. How much are they chasing OpenAI? How much were they already building this chain of thought?
Well, Google has been a pioneer, actually, in building the kind of technology that is used in a lot of these systems. As you mentioned, chain of thought. The idea behind that technique is that you're basically, when a person gives an AI system a prompt, like a really hard math problem, let's say, with this kind of technique, the AI system takes the prompt, and in the background, unseen to the user, it's kind of coming up with a bunch of different similar prompts and sorting through the problem sort of step by step, and then presenting what seems like the best answer to the user. So Google has a history here, but as we know, OpenAI made a splash recently with their O1 model. And Google tends to be more cautious. I mean, it is a huge company. There's a lot of moving parts there. So we'll see what happens.
It tends to be more cautious, but since ChatGPT's release in November 2022, it's been a wild ride since.
It's been a while.
There's pressure there, right? And I think the competition, they're cognizant of it. So what does that look like? The pushback to catch up, I suppose, against OpenAI?
Yeah, I mean, I think it looks like a few different things happening there, right? Initially, when ChatGPT was so popular with people, I think Google felt caught flat-footed, but and felt, like, oh, we have to put something out so we can be competitive with that. But as more time has passed, I think they want to be really cautious. I mean, they have a lot of things to think about. They have so many users, and they have so many people working on different things within their company. So I think with this, they're really trying to take their time and get it right. And they have some amazingly smart people that have been working on this kind of technology for a very long time. So it'll be really interesting to see what comes out of there.
Haven't even discussed Notebook LM yet, which is a lot of fun. Rachel Metz, we thank you so much. Meanwhile, well, not everyone is bullish on AI. Daron Acemoglu is a renowned professor at MIT and is not so sure that AI can deliver on the promise of an economic revolution. He wants to make clear that he does get the potential of artificial intelligence, but by his calculation, only a small percent of all jobs, a mere 5%, is ripe to be taken over, or at least heavily aided by AI over the next decade. Ed, what have you got?
Okay, it's time for today's AI in action, and today we're taking a look at Codeium, which aims to utilize AI to accelerate software development. Just last month, they raised $150 million in a Series C round with a valuation of $1.25 billion. Codeium CEO and co-founder Varun Mohan joins us for more. Welcome to the program. A lot of people phoned me and said that you got to check out Codeium. So let's start with the basics of what is Codeium.
Thanks for having me, Ed. So Codeium is an AI software development toolkit that fundamentally enables developers to write software faster and review software faster. Right now, the platform has over 700,000 individual developers that use the product and over 1,000 enterprises. And one of the key things that we focus on is deep personalization based on the rest of the code base. Code is a very interdependent sort of knowledge and data source, and we try to make the responses as personalized to the private data inside companies. Right now, they're seeing around 50% of all of their private code that's committed generated by Codeium, as well as a 20% reduction in total application development time when using Codeium.
I'm going to make an observation, and you respond to it. You have 700,000 users and 1,000 enterprise customers. You've raised relatively little money compared to a number of companies that have raised quite a lot of money but haven't started selling anything yet or anyone using their tech. What do you make of that?
So I don't have a lot of comments on this. I previously worked in an industry, autonomous vehicles, where companies were raising larger and larger amounts of money without actually developing a product. So I think this is not uncommon in a bunch of categories. I think what we believe in is we're in a space that is moving incredibly fast, and the only thing that would guarantee us the ability to actually earn the right to work with large enterprises is actually shipping incredibly quickly, staying really close to the technology.
Varun, it's a relatively crowded space, though. You've got GitHub Copilot. You've got Sam Altman telling me that his favorite thing to do on the latest version of ChatGPT is to code. So how do you ensure you take market share?
Yeah, I think we believe the space is going to be crowded largely because the prize is quite large. If a tool is able to actually generate or reduce application development time by 20%, it would be surprising if there were only one player in the category. The way we sort of like to look at it is, what can we do differentially better than other companies? And compared to our biggest competitor being GitHub Copilot, the big thing we do is care a lot about security as well as being a platform agnostic tool. Right now, we're noticing a very small fraction of large enterprises standardizing on GitHub Enterprise Cloud. And we, on the other hand, don't really tie ourselves to any one of these platforms. In addition to that, we don't actually require a company to send their IP outside of their firewall, which is one of the things that GitHub Copilot actually requires right now.
Okay, so you feel you've got a unique selling point there, but you're going to keep on innovating. You told previously that you raised a load of money before and haven't actually even spent that. Why do you need this money right now?
I think as we're starting to work with some of the world's largest enterprises, companies like Dell, we want to make sure we're great sort of vendors to our customers. And that means continuing to invest in innovation. As you can imagine, GPU costs are fairly high. But also beyond that, increasing the size of our research and development organization. We just don't want to be in a position where we're working with large companies that trust us and we actually cannot provide support to them in the best way possible.
You raised $65 million in a Series B and now just raised $150 million in a Series C. You've got some money to spend on R&D. Codeium CEO Varun Mohan, thank you very much for joining us. Now coming up, Google racing OpenAI and that reasoning software we just spoke about. But what next in terms of innovation in AI and the key companies to look out for? This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Quick check on these markets, which have turned around, Ed. We were trading lower at the start of this program, and now we're up some 0.4%. You got some of the key chip makers to thank for that. We got Broadcom and Nvidia leading from a points perspective. We're also digesting the latest economic data, but largely Bitcoin also bouncing back from yesterday's sell-off. Of course, that all about geopolitical tensions, a search for safety amid what was, of course, the key concerns of Iran missile attacks on Israel. We now await the comeback, but we're currently improving from a market sentiment perspective, Ed.
Some of the other single names we're watching, Tesla down after the company posted quarterly sales coming just below estimates, but it's off its session lows. Apple's now flat. It had been down as much as 1.5% after Bloomberg reported the company's near production of a new low-end iPhone, which could come as early as next year. Let's talk about the markets. Bloomberg's Jess Menton is here. I guess on a day like today where at the index level we were treading water, some of those mega cap names, the moves are more notable. Do you see a story when it comes to tech in markets today?
There is, because if you look at the MOV function, which y'all were just alluding to when you're looking at obviously these big tech and growth companies and their weightings in the S&P 500, when you do have, say, Nvidia as well as Broadcom among the biggest point contributors to the S&P 500. The other side of that, though, of course, Tesla, and y'all have been talking about how it's missed those third quarter delivery numbers there, especially some of the issues potentially with China, but that's actually the biggest point decliner here in the S&P 500, as well as some of the other names like Apple, of of course, as well as Meta and Alphabet. So when you have more of the chip shares, because the SOX was actually down last quarter, it snapped a streak of gains here. And Evercore actually made a call for the fourth quarter going into year end that they did anticipate to see a potential rebound in those chip stocks. And you're beginning to see some of that this morning, guys.
Yeah, look at that. The stock's up more than 2.25%. You type in certain functions to see when that is the biggest move since September the 26th, we understand. Is this just the knee-jerk reaction to yesterday's sell-off, or is this thesis changing in any way?
It looks like it's basically a knee-jerk reaction because that was the biggest decline in almost a month for the S&P 500. And then especially a lot of these chip makers, even Micron Technology, ahead of its earnings report last week, obviously it boosted a lot of other chip companies after it had reported and had that optimistic outlook. We still have a lot of time before we would hear from NVIDIA, though. That's going to be well into November by that point. But when you're looking at that, a lot of those companies like Micron were trading at quite a discount there. And especially because of that, as well as some of these other names, even NVIDIA, for instance, even once it had that stock split back in June, it was actually underperforming Apple. So the question is, moving forward, a lot of those that looked a little bit cheaper, maybe people are going back in and stepping up to buy those types of names now, Caroline.
Jess Menton, we thank you. Chip companies thinking about something else at the moment. Global semiconductors makers are really monitoring supplies of quartz. That's after Hurricane Helene halted production of 2 North Carolina mines that provide basically most of the world's supplies. For more, Bloomberg's Dana Wollman joins us to explain why high-purity quartz matters to chip makers.
So I'm really glad to be here geeking out about this with you. Quartz is a prehistoric material. We're talking a mineral that is hundreds of millions of years old that developed at a time when there was very little water around and on the planet. And because that scarcity of water means fewer imperfections in the material, and fewer imperfections means that when it's used in this chip making process, it imparts fewer imperfections onto the eventual chip.
Its role in the manufacturing process is multifaceted because you have quartz wafers, it's used in frequency control. But if there's one thing I've learned about the industry in the last few years, it's that it's quite good at stockpiling the stuff that it needs. Is that the scenario that's playing out here?
Indeed, our reporters reached out to a whole bunch of major chip makers on different continents, TSMC, Samsung, SK Hynix, and all of them delivered comments to us that seemed very calm, unbothered. They all seem to, for now, be thriving off of the stockpiles they have. That said, to your point in the intro, these 2 mines in North Carolina account for about 80% or maybe even a little more of the global supply of quartz. So really, their calmness in this situation depends on the assumption that these mines will eventually and hopefully soon be able to reopen after the hurricane.
It feels almost very painful that something that was focused on because of a lack of water is now prevented because of too much water and flooding in a certain area. Do we have any time frame, anything from the manufacturers in North Carolina as to when they might get back online?
Our reporting doesn't really nail down a specific timeline. I think the tone right now is rosy enough. I don't want to say rosy given the circumstances, but I think the manufacturers seem confident enough at this moment that the plants will eventually reopen.
Dana Wollman, we thank you so much. Meanwhile, it is time for Talking Tech. And first up, KKR considering a takeover bid for chips and electronics equipment maker ASMPT. It's all according to sources. KKR has made a non-binding preliminary approach for the company. The move follows similar attempts in the past by other bidders. Plus, Oracle set to spend $6.5 billion to build out cloud service centers in Malaysia. The company hopes to establish a cloud region in the country, providing data centers to corporate clients. Oracle didn't offer timeframes or specifics of the build-out. And a new law signed in the Philippines will impose a 12% value-added tax on non-resident digital service providers. Sectors set to be impacted include online search engines, advertising platforms, digital marketplaces, cloud services, and even media like Netflix, HBO, and Disney. Meanwhile, coming up, we're going to be joined by the former president and CFO of SoftBank Group International. We want to get behind the scenes to look at how tech VC firms were behind some of the biggest deals. What does he make of ARM? What does he make of the OpenAI valuation? This is Bloomberg Technology.
We all know the powerhouse that is SoftBank, the tech investor that backed the likes of Arm, Nvidia, TikTok, Uber, Alibaba, and WeWork. But we don't know as much about what goes on behind the scenes of these major deals. A new book gives us a peek into the dealings and into SoftBank's iconic founder, Masayoshi Son. It's called The Money Trap, written by Alok Sama, a veteran Morgan Stanley banker and a former chief deal maker at SoftBank. And he joins us now in San Francisco. Let's start by asking, now that the book is written and out, what is SoftBank?
Well, first of all, thanks for having me. Great to be here. What is SoftBank? I mean,
you must know. You just wrote a book about it.
The name itself is a bank for software and gets back to Masa's roots as a software distributor for Microsoft software. But SoftBank is really about Masayoshi Son, and I consider it one of the great privileges of my life to have worked alongside him for a while, kind of fancy titles aside. My role really there was chief, kind of deal maker in chief, so to speak. And I think the one thing I would really highlight about him, the standout characteristic, is he's a futurist in the true sense of the word. And that term, visionary genius, it gets thrown around a lot, but he's proven it time and time
Well, it's
again.
an interesting point in sort of the mechanics of how SoftBank works, right? It is a conglomerate. Then you have the Vision Fund part, Vision Fund 1 and 2.
Yeah.
Each has an investment committee.
Yeah.
My point being that ultimately it still in many senses comes down to Masa making an instinctive call on whether or not to invest in something. Is that what you found?
It's more than just instinctive, and the answer is yes. For me, at least, SoftBank is all about Masa, and the standout thing about SoftBank is he gets the big bets spectacularly right. I mean, stories like WeWork, they're kind of fun, amusing. I talk about it too, but nobody's made a movie about Arm, for example, which is just a remarkable success story, right? And we can talk about that. And SoftBank Japan is lesser known, low profile. There's no reason a U.S. audience or U.S. investors would be familiar with that. But it's a remarkable story. I mean, people think that Masa's comeback in 2006, 2007 had to do with Alibaba, and Alibaba was phenomenal. But SoftBank Japan, which is a mobile phone company, Vodafone was so desperate to get rid of it, they actually lent Masa money to take it off their hands. And, he bought that company on the strength of a handshake from Steve Jobs to give him an exclusive for smartphones. And he kind of saw that coming. So he's made these huge bets. And by the way, his gain on that on a mark-to-market basis on SoftBank Japan, on Vodafone Japan is to the order of 40 billion. On Arm, it's 100 billion. So he gets these big bets spectacularly
right. That's a real standout has got some spectacular misses as well. And that's the VC way. You bet big, some of them hugely pay off, others don't. But there was this moment where money being thrown at WeWork, money being thrown at Improbable in the UK, money being thrown at WAG, which went horribly wrong, a dog walking service. Yeah. What makes the OpenAI potential bet that we're hearing about, SoftBank bringing in 500 million, is that the right one to be throwing money at right now?
Well, I'm not sure throwing money is the way I describe it. I think you have to keep in mind that Masa's he's been fascinated by AI. He was talking about this when I first got to know him back in 2014, and I described this in my book, sitting on his porch in his home in Tokyo. And he was talking about obsessively about AI, about singularity, and what it would mean from a technology perspective. And honestly, I didn't take him seriously at the time. So and he's been very clear now. It is, I think, in June at his AGM, he announced that everything we've seen before is a warm-up deck. So he's ready to make he's ready to make some big moves, and that's a long-winded way of answering your question. I mean, you look at SoftBank and the scale on which it operates. I think it's sitting on certainly north of 30 billion, probably closer to 40 billion in cash. So I don't think of 500 million in OpenAI as a big bet by SoftBank standards. I think it's sort of being in the game, so to speak. I mean, I'm kind of waiting for Son to make his next big move, and it will be big, knowing him. That's just the way he rolls.
to what end? Paint us the vision, therefore, because we too have heard the AI thesis. This was why ARM, the deal that you helped orchestrate, was first the target. But to what end? What does he build eventually? Because sometimes he's purchasing with SoftBank, sometimes he's purchasing with the VC arm.
Well, let's be clear. The first vision fund was a true fund in as much as it involved third-party money, mainly from the Middle East. The other vision funds are on balance sheet. So, you know, the subtlety of SoftBank versus the VC arm, to me, it's not meaningful in that context, right? I mean, so for example, when you read about SoftBank buying GraphCore, my understanding is that's a strategic deal, and what Son intends to do with that in conjunction with his ownership of ARM, you know, I think remains to be seen. But talking about vision, again, I mean, I speak as I've been out of SoftBank for 5 years now, so I'm obviously not an insider. But you know, in terms of what I see, first of all, there's ARM. ARM is, and I don't follow stocks. I'm not a research analyst, so I'm not going to comment on the valuation, but ARM, for me, is remarkably well-positioned as AI moves to the edge of the network. ARM has always been about blueprints for chip design. Energy efficiency has always been their secret sauce. And when you get to the edge, you know, AI, you know, with Apple Intelligence in smartphones and autonomous cars, that gets to be really, really important. I think that, you know, I think the GraphCore acquisition is a signal that, and I think the company's been pretty explicit about it, that ARM intends to be a challenger to NVIDIA in terms of NVIDIA's dominance is in data centers. So ARM intends to challenge NVIDIA in that regard too. So there's a lot of that going on. My own view of AI, you know, I do spend a fair bit of time with Warburg Pincus as a senior advisor, and what they're seeing, they've avoided getting into the, you know, LLMs, but they've been, you know, what they're seeing is AI very focused on their portfolio and the implications for deploying AI, margin improvements. Jensen Huang talked about it in his last earnings release. I mean, he gave the example of Amdocs and a 30% reduction in customer service costs by deploying an AI agent. So that stuff is very, very real.
Let me ask you something to end the conversation. Yeah. They were in early in NVIDIA, SoftBank, but then they got out early and they grew that.
Yeah.
500 million in OpenAI may not be big. You said that they will make their next big bet. How do you know that he'll time it right? And that in the end with AI, whatever happens, he'll be a part of whatever the conversation we're having is?
Well, because the track record speaks for itself. He's done it over and over again, right? I mean, I think with smartphones, he was at least 2 to 3 years ahead of it. I don't know what his next big move will be, but I do know it's going to be big, and I think he's come out and said it will be something to do with AI, and it may well involve. Yeah, look, I mean, energy is another space. Why SoftBank Energy? Not many people get this, but SoftBank Energy is one of the leading solar power generators, and that, as we know, is a huge bottleneck in terms of the build out of these data centers. I mean, they're hugely power hungry, so could be something in that space, for example.
Alok, Sama, we thank you so much for spending some time with our senior advisor at Warburg Pincus, former president and CFO of SoftBank Group International, and the author, of course, of The Money Trap. Coming up, Pinterest CEO tells us about its use of generative AI to maximize advertising impact. This is Bloomberg Technology. Pinterest has just launched Performance Plus ahead of the holiday season. It's a new suite of AI and Gen AI tools to help advertisers optimize targeting, drive results. Here to explain is Pinterest CEO Bill Ready. And I'm assuming the better efficiency in targeting for advertisers means more repeat advertisers on your platform.
Yeah, that's exactly right, Caroline. You know, we just had Pinterest Presents yesterday, which is our annual marketing event for advertisers, and we saw a record turnout for that. And really at the core of that is that over the last 2 years, we have transformed Pinterest from a place that was just digital window shopping to a place where people are actually clicking and buying and shopping, you know, directly with retailers. And that's given us our best product market fit ever with users. But it's also cutting through for advertisers, where we have more than doubled the number of clicks to advertisers year on year for 3 consecutive quarters. And as we're bringing them great AI-driven ad tools, it's letting more and more advertisers take advantage of that.
You're brought on because your expertise in commerce and payments and a whole wealth at Google. I'm interested, Bill, as to where the clicks are being made, which products, which demographic you serve.
Well, so that's a great question, Caroline, because we have really become the place that Gen Z goes to shop. So we have more than 40% of our users are Gen Z, and it's our largest, fastest growing demographic. And Gen Z states that the #1 reason they go to Pinterest is for shopping. And more than 60% of them say that they're always shopping. So when you think about the rise of Gen Z, where their buying power is just growing tremendously. In fact, over the next 5 years, Gen Z is predicted to bypass baby boomers in buying power over the next 5 years, and Pinterest is where Gen Z goes to shop. And so obviously a great place for advertisers to meet that really important growing audience.
Bill, do you have a sense for this upcoming holiday season what the biggest funnel for you will be, or at least who you will help the most? You and I have talked a lot about the relationship with Amazon, for example, but also some of the other names from China are becoming increasingly important for you.
Yeah, so we're really broadening our reach with advertisers. So as we opened up the stores on our platform, we saw the largest, most sophisticated advertisers lean in first, which is great because they're the hardest to please, the most discerning. But what we're seeing now is that that's really widening. And with Performance Plus and those AI-driven tools, it's really making it easier for a broader set of advertisers to take advantage, where it gives them automated campaign creation, automated creative. And so we're seeing big advertisers win. For example, Walgreens is seeing a 55% improvement in click-through rate by using our generated backgrounds so that products look more attractive. So you can see that, that shampoo or that hand soap and what your bathroom might look like. But we're also seeing, as we go down to smaller up-and-coming advertisers like Ruggables, which is a really fantastic home goods company, we are now their largest traffic source by volume and efficiency, literally driving 3 times the clicks at half the cost. So these AI-driven tools are really broadening out the set of advertisers on our platform.
Bill, we've been thinking a lot about augmented reality. Check out my piece on Meta's Orion. Will Pinterest make investments in hardware for AR or partner with Meta, Snap, expand what you're doing?
We're not a hardware platform, but we are seeing that we have become increasingly a destination for our users. More than 80% of our usage is people coming to our mobile app directly. And that usage increasingly is, more than half our users are here to shop. That's even more so with Gen Z. So I think as you look at these visual exploration journeys, this is really where Pinterest is winning, that on visual exploration, visual search, shopping is inherently a visual journey. So these kinds of things are really where Pinterest stands out, and we see users coming to us directly for that increasingly.
Are you LLM agnostic? What's the underlying technology driving these innovations?
Yeah, great question. So, AI has become a core competency for us. I've talked about previously how when we moved to GPU serving and in large models, you have models 100 times larger than what they were 2 years ago, that gave us a 10 percentage point lift in relevancy of our recommendations. But the AI is only as good as the signal upon which it's acting. And what we have is really unique signal where, unlike other platforms, users come to Pinterest and curate their taste. How's that handbag going to look with that dress, with this pair of shoes? And hundreds of millions of users do that every day. And so that gives us really unique signal to say, what's a great recommendation, not just for that user, but for other users. So when we're training models, we're training on completely unique signal to our platform. We actually see that when we test LLMs off the shelf from major LLM providers, we actually see that when that same LLM is tuned on our signal, we get 300 basis points of additional engagement from our unique signal, which really makes tangible how unique our signal is relative to what these LLMs have elsewhere.
Pinterest CEO, Bill Ready, we thank you for your time. Now that does it for this edition of Bloomberg Technology, Ed.
Check out the podcast. You know where to find it. This is Bloomberg Technology.